Hi everyone, let's look at a question that incorporates financial statements, right? The statement of financial position and the income statement as well. The statement of comprehensive income. Let's look at that question and see how we get along. Right, the first part is basically concept. Choose the correct term. To complete each of the following statements, write only the term next to the question number. Right, the statement reflecting the financial position of the company is a balance sheet. Right, so that would be a balance sheet. Then consumable stores on hand. Right, those are current assets. Remember on note number 4, when you're calculating inventory, it's trading stock, right, plus consumable stores on hand, right? So that will be an asset. Then a fixed deposit that will mature in 2 years, right? A fixed deposit that will mature in 2 years. That will be a non-current asset. Right, a fixed deposit becomes current asset when it matures within 12 months. That's when you move it from the non-current assets to current assets that forms part of the cash and cash equivalent. That is, whatever fixed deposit that will be maturing in the next 12 months, right? That is moved from non-current assets to current assets under cash and cash equivalents, right? Then the difference between current assets and current liabilities, that's net working capital. The statement reflecting the financial results of the company is called an income statement. So that's just the part of the question, right? The statement reflecting the financial results, right? So income statement basically reflects the financial results, right? How the company performed in terms of making profit or loss. Those are the financial results, right? On the other end, the statement financial position reflect the financial position of the company, that is the balance sheet, right? Okay, let's move along. Then statements of comprehensive income and statement of financial position refer to information from the records of Feint PPE Limited for the financial year ended 28 February 2022. So year is ending 28 February 2022. Complete the following for the year ended 28 February 2022. Right, statement of comprehensive income statement. Right, then equity and liability section of the statement of financial position. So you're only doing half of the statement of financial position. That's equity and liabilities at the bottom half. Right, then the information. The following balance of totals appeared in the books of on 28 February 2022. Right, ordinary share capital. Probably we have to work it out. Retained income 28 February 2022. Right, you see this date here. That's the closing balance. That means they gave you the closing balance. We'll see maybe when you check the income statement or the statement of comprehensive income, you find that that figure is in set already 468,000. Mortgage loan, best bank, good question mark. Then trading stock, you're given 370,870. Then creditors control, 203,100. Provision for bad debts, that's 1 May 2021 March 2022. Either as the opening balance, right, or the previous provision for bad debts, that is 2,114. SARS income tax provisional payments. There's a question that we dealt with provisional payments, right? We'll see how we work it out, whether is there tax liability or tax asset at the end. Then deposit from tenant, right? Deposit from tenant, right? Then sales, question mark, cost of sales, question mark, retained income, right? 130,200. So rent income 130,200. Then audit fees 25,000. Insurance 103,500. Sundry expenses It's a question mark again, so it's a lot of question marks. Then dividends on ordinary shares, 340,000. Adjustments. Feint PE operates on a 60% markup policy on all sales. Last year's sales amounted to 6,500,000. Feint PPE is pleased to announce a 20% increase in sales for the last year. That means you have to calculate your sales as a 20% increase. 20% of what? 6,500,000. Right, for the year ending 28 February 2022. There were no sales returns for the year, so no sales returns. Right, so you don't have debtors allowance. According to Fiscal Stock Tech, trading stock on hand amounted to 358,240. To compare it with the trading stock that we have, it seems there's a stock deficit there. A debtors account with a credit balance of 3,400 must be transferred to his account in the creditors ledger. So a debtor has a credit balance, right, and you need to transfer it to his account in the creditors ledger. So that basically means this particular debtor is your creditor too. So they buy goods from you, you buy goods from them. So in this particular instance, they paid more. They paid you more. So you need to transfer whatever they paid you more to their creditors ledger. Right. These debtors ledger and creditors ledger, these are dealt with in grade 10. Right. You should be very familiar with that. Decrease the provision for bad debts by 2,213. Right, so you're asked to decrease the provision for bad debts. So once they're saying decrease, that's an income. Right. A vacant storeroom was rented to a tenant on 1 March 2021. Right. So that's previous year. Right, on 1 December 2021, the rent was decreased by 7.5%. Provide for the outstanding rent for February. Right, so normally we deal with the rent being increased. Right, in this particular instance, the rent was what? Was decreased. Right, so just have to pay attention to the question. Feint PE paid 40% deposit on their audit fees for the year. Right, so they paid 40% deposit. Right, the balance will be settled on 5 March 2022. That's after the year end. So you need to provide for the accrual. Then an insurance policy was taken on 1 August 2021 at 11,500 per month. Right, so we'll need to calculate insurance policy, right, that was taken on 1 August and 11,500 per month. So normal insurance policies are on a yearly basis, right? So we need to calculate how much did they pay for the insurance, right? We need to calculate how much was paid. The loan statement from Best Bank reflects the following. Right, balance at the beginning of the year, it's 1,250,000. That's opening balance. Right, fixed monthly repayments including interest 45,200. Interest expense capitalized, right, 220,500. Right, so from that we can calculate the closing balance of the loan. The interest for the next financial year is expected to be 150,000. So that's the expected interest to be 150,000. Part of the loan will be repaid in the next financial year. Right, so we have interest including payments including the total amount that is capitalized, right, or the capitalized interest. Then they're telling you that interest for the next financial year is expected to be 150,000. So we'll look at the workings, how we calculate the loan that is due within the next financial year, so that we remove it from non-current liabilities to current liabilities. Sundry expenses, the missing figure in the income statement. That's the balancing figure. The income tax, which amounted to 340,000, was calculated at the rate of 28%. So we are given income tax. So this comes into effect when you look at the SARS payment, provisional payment, right? So we are being told that income tax here is 340,088. Then dividends, shares and dividend. The authorized ordinary share capital consists of 800,000 shares, of which 60% was in issue. Total dividends for the year amounted to 445,600. Right, so you have total dividends 465,600. The following financial indicators were calculated on 28 February 2022. Operating profit on sales, right, it's 15%. Net asset value per share is 720 cents. Net asset value per share, right? That's the NAV. Right, yes, that's the end of the question. At least try and answer the question. Right, these ones I highlighted them earlier. I think for purpose, I think this was balance sheet. Then 1.2 was just go back. Consumable stores, current assets. Then 1.3 fixed deposit, non-current assets. That's non-current assets. Then the difference between net current assets and current liabilities, net working capital. Then the statement reflecting the results of the financial results of the company, income statement. Right, so those are the answers. Right, let's look at the sales. Right, sales here we're told right here on the adjustment. Right, 65,000, 6,500,000 we are told for this current year ending 28 February 2022. The sales would have increased from previous sales by 20%. So this 6,500,000 is for the previous year. So for current sales, you are going to say 6,500,000 times 120%. The reason why I say 120%, I'm already adding the 20%, which gives me the total amount. Right, so this will be or you can say times 1.2 is to give you the same answer. 1.2, that's 120 over divided by 100. So this will give you 6,500,000 times 120%. 6,500,000 times 120%. That's 7,800,000. Right, then we're told again in the same that markup is 60%. Right, that is put on sales. So we need to calculate our cost of sales, because in the question we're not given cost of sales, right? It's a blank as well. So we need to calculate our cost of sales. So our cost of sales will be 7,800,000, our sales, multiplied by 100 divided by 160, and we're told that there is no returns. There are no returns, right? So multiply by 100 divided by 160, right, to get 4,875,000. So that's an outflow. That's minus 7,800,000. You get a gross profit of 2,925,000. That's your gross profit. Right, other incomes, we have rent income, right, then provision for bad debts, this one we're given is 230. I'll show you where it is. Your total decrease provision for bad debts by 230, so that's an income. Then our rent, right, a vacant storeroom was rented to a tenant on 1 March 2021. On 1 December 2021, the rent was decreased by 7.5%. Provide for the outstanding rent for February. That means they didn't receive rent for February. Okay, so what we need to do in this particular question, we have the rent that were given here. Rent income 130,200. I need to write it here. That's 130,200. So what happens here is for the first months, rent was 100%. So normally how I work it out this way, right? So from March to 30 November, rent was 100%, right? So that would be 100 multiplied by how many months? That's March, April, May, June, July, August, September, October, November. That's times 9 months, which gives you 900%. Then from November now, remember you only had paid up to, they will only have received up to January, because for February they're saying provide for the outstanding rent we haven't received. So that will be 92.5 times that is December, January, times 2, which is equal to that's 185. So this total will give you 1,085. At 1,085. So we want to calculate this here, the total of the last 2 months, because December and January. So what you do is you're going to say this 1,300 times 185 over 1,085. This will give you, that's 130, 200 times 185 divided by 1,085. So the total rent received right? For the 2 months after the decrease is 22,000. So the monthly rental income, because this is for 2 months, you divide by what? By 2. So the monthly rental after decrease is 11,000. So your rent outstanding here will be 130,200 plus 11,000. This will give you 131,200, 141,200. This will give you a total of 141,430. Right, so we're done with that part. Then your total gross operating income. Wait a minute, I think I did something wrong here. Wait, let me just recalculate this. That's 130,200 times 185, 130,200 times 185 divided by 1085. Now this is 22,100, not 11,000, 11,100. Right, so that will be 11,100. Then this as well will be 11,100. Right, then that will be 300. And that will be 530. Right, thank God I saw it early. Right, then so our gross operating income will be 2,925,000 plus 141,530. That will get 3,066,513. Right, so that's our gross operating income. Then expenses, some are filled in. So what expenses do we need to fill in here? Right, payment for bad debts, we're done with this. We're done with income. Deposit fee on their audit fees for the year. Right, let's start with audit fees because that's the next one. Now let's start with trading stock so that we go them line by line. Let's start with trading stock. According to physical stock take, trading stock on hand amounted to 358,240, and according to our books, we got 370,870. So when we go back to our answer book, trading stock deficit. That's 370,870 minus 358,240. Right, that's our first one. Right, then the other one that we need to calculate is vacant return deposit. No. An insurance policy was taken out on 1 August 2021 at 11,500 per month. Right, that's an insurance policy. Right, on 1 August. So what will happen is for this insurance policy, if you come here, the total insurance that were given is 103,500. So that's 103,500. So for you to find out, right, because 11,500, if you divide this by 11,500, right, because the question was kind of like a bit silent on many fronts, but the assumption is now that the total insurance that was paid, it's for this particular insurance that was taken, because they didn't say additional insurance was taken. I saw all the 103,000 is part of the 11,500 per month. So if you divide 103,000 103,500 divided by 11,500, I had to find out this was paid for 9 months. That's a 9 month. But from the time the insurance was taken up to the time that our year ends, right? It's from August, September, October, November, December, January, February. That's 7 months. So the straight way forward of doing this, just multiplying the 11,500 by 7, right, to get the amount that you need to include for insurance, or subtracting all that. But once you calculate that it is for 9 months and you want 7 months and you are given the monthly insurance, there's no need to write a lot of stuff. So insurance, that's 11,500 multiplied by 7 months. Then the last one, the loan statement, that goes to, then interest for the financial year is expected. No, that's still loan. Then standard expenses is the balancing figure. The income tax, I think there's something that I'm missing here. I thought I saw something about auditors. Right, F. Right, I don't know, I skipped it. Feint PE Limited paid 40% deposit on their audit fees for the year. The balance will be settled on 1 March. Right, so if you come on our audit fees here, it's 25,000, and that's represent 40%. So if you come to our question, right, audit fees, that's 25,000 multiplied by 100 over 40. I had to get the 100%. Right, let's calculate these. And that's 25,000 times 100 divided by 40. That's 62,500. Then 11,500 times 7, that's 80,500. Then 370,870 minus 358,240, that's 12,630. Right, standard expenses will calculate. Right, then we go. Right, we're given. Right, we're given for the operating profit this particular last part on financial indicators. Right, operating profit on sales. Right, so our operating profit is this one. Right, it's this one. So we need to calculate our operating profit on sales, and we're told that our operating profit on sales is 15%. So what you do is we have our sales, which is 78,000, 7,800,000. So our profit on sale, that's 7,800,000 times 15%, right? Because that's what you're told, what operating profit on sales, right? So that's 7,800,000 times 15%. That's 1,170,000. That's our operating profit. Once you have our operating profit, you can calculate our operating expenses, right? So operating expenses will be 1,170,000 minus gross operating income of 3,066,530. So we'll have here 1,896,530. Right, to get our sundry expenses, right, to say that 1 million, right, because basically to get this, we subtracted gross operating income minus operating profit to get operating expense, total operating expenses. Now to get sundry expenses, we need to subtract all the other expenses from the total expenses. So that's 1,896,530 minus 601,450 minus 470,850 minus 281,000 minus 12,630 minus 8,500 minus 62,500. So our sundry expenses is 387,600. That's our operating, sundry expenses, right? Then what we have here is interest income. Now let's see what they say about interest income. Do you have any fixed deposit that we given? I don't think so. I didn't see anything pertaining to fixed deposit. Let's look at other questions that we can complete and see if there's any balancing figure. Okay, all right. Then we are told as well, right, your tax is 340,000, which is 28% of the net profit. So if you come to your answer here, your net profit after tax will be calculated as that's 340,088 multiplied by, remember they say this represents the 28%, right? So we want to calculate this 72%, because 100 minus 28 you get 72, right? So we say 72 over 28. So this 28% is represented by 340. That will give us our net profit, right? So our net profit will be let's calculate, that's 340 and 80 and 88. And make sure that I'm getting this figure correct. Yeah, times 72 divided by 28, that's 874,512, right? So our net profit before tax will be 874,512 plus tax, which is 340,088, which is 1,214,600. right? Then interest expense or finance costs. Right, interest expense, we were told in the question that the interest capitalized 220,500. We just take that directly into our answer. That's 220,500. Right, that's 220,500. That's interest capitalized. Right, then interest before net profit before interest expense. Right, we add again the 220 to net profit after before tax. Right, so that's 1,214,600 plus 220,500, because we're working backwards. This will give you 1,435,100. So the difference between the operating profit and net profit before interest expense will be our interest income, which is 1,435,100 minus 1,170,000. You get 265,100. Right, that's our income statement. Right, done and dusted. There's nothing more that you need to do. It was more or less simple, if I have to say. Right, then moving on to the second part of the question. Right, we need to calculate the equity and liability side of the incomes of the balance sheet or statement of financial position. Okay, so for ordinary share capital, right, we need to calculate shareholders' equity first, right? Because already we're given this, right? As I earlier say that this will be inserted in one of our answers, because that's the closing balance of retained income, right? If you check on our question here, right, it's the financial analysis that basically did the whole thing. Remember, I used this to calculate operating profit, so we're going to use this to calculate shareholders ordinary share equity, right? We use that to calculate the shareholders equity here, right? So basically the net asset value, the NAV, the formula is given by shareholders equity divided by what? Number of shares. Right, to get the net asset value, right? Net asset value, and you can use the net assets. Net assets basically it's total assets minus total liabilities. You get net assets as well. You get exactly the same value. So total assets, right? Net assets, right? So net assets is equal to total assets minus total liabilities. So when I say total liabilities, it basically means non-current liabilities plus current liabilities. That will give you your shareholders equity. So if you take your total assets and subtract total liabilities, you get your shareholders equity, right? So in this particular question, we were told that the net asset value per share is 720 cents, right? So this was equal to 720 cents, right? Then we're told as well that the total shares in each authorized shares 800,000 and 60% issued, right? So for us to get the value of the shareholders equity, we know that this is 600. This is what 60% of what? Of 800,000. right? So this is 60% of 800,000. So if we want to find 60%, then multiply by 720, we'll get our what? Our shareholders equity, right? So if we come to our question here, shareholders equity, that will be 800,000 times 60%. All this multiplied by what? 720. I remember this 720 cents. I just have to be careful, right? So whatever value you get, if multiplied by 720 cents, you need to convert it back to normal runs. Right, so that's 800,000 times 60%. That's 480,000 times 7.2. That will give you 3,456,000. Right, that's 3,456,000. Right, then our ordinary share capital. Remember, this is ordinary share equity, shareholders equity. That is ordinary share capital plus retained income. Then our ordinary share capital will be this 3,456 minus retained income. That's minus 468,000. That's 2,988,000. Right, that's our ordinary share capital. Then our non-current liabilities, there's a little bit of working there. Right, so our non-current liabilities, we have this situation. We're told that the balance at the beginning of the financial year is 1,250,000. So if you insert that, that's 1 million, that's loan, 1,250,000. Right, this 1,250,000, that's the balance at the beginning of the year, right? Minus repayments. Right, so remember the repayments, it's 45,200, right? Multiply by 12. Right, then these particular repayments, what is going to happen is they include the interest, right? So you're going to say the total repayments, right? You subtract them, then plus the loan capitalized, right, which is 220,500, plus 220,500, the loan capitalized, right? Then now the second part, because this is the whatever you get here, you get the closing balance, right? So here you're going to get the closing balance, right? So this will give you the closing balance of the interest, which is 45,200 times 12 gives you 542,000, right? So this will be 542,400. So 1,250,000 minus 542,200. Now, and let me write this in a different color so I don't mix up things. That's 45,200 times 12. That's 542,400. Right, so 1,250,000 minus 542,400 plus 220,500. So this will give you 928,000. That's 928,100. Right, then there's this second part that says interest for the next financial year is expected to be 150,000. right? Part of the loan will be repaid in the next financial year. That means you continue paying the loan, right, for 5,200 per month. So you continue paying the loan, right? So this will be 928,100, right, minus, so the interest portion, because you're still going to pay 542,400 minus the interest that is going to be capitalized, the 150. The 150 is going to be capitalized, so you're not going to pay in total. You need to make sure that you cater for the interest. So the interest that's going to be capitalized is what, 150,000. And so this as well gives you a value of at 542,400 minus 150,000, 392,400. So you get 392,400. So this will be the portion of the interest of the loan that will be paid in the next financial year. So basically you have 928,100 minus 392,400, right? 928,100 minus 392,400, that's 535,700, right? Then that's your long-term loan. Then that's then you go to liabilities, trade and other payables. Right, on trade and other payables we have trade creditors control, which is 203,100. So that's 203,100 plus we're told about this, right? A debtor's account with a credit balance of 3,000 must be transferred to his account in the creditors ledger, right, plus 3,400, right, plus there's a rent deposit, deposit from tenant of 12,000, because remember it's not our money, right? That's plus 12,000, right? Plus accrued expense, right? There's only one accrued expense that we calculated, that should be coming from audit fees, right? So this should be 62,500 minus 25,000, right? That will be the accrued expense, right? Remember we only paid 25,000 and the rest will be paid later, but the total amount to be paid was supposed to be 65,000. So 65,500 minus 25,000, that's no 62,500, sorry, 62,500 minus 25,000, that's 37,500 plus 37,500. Then we're done with that. Right, then for SARS, income tax, that will be actual tax. I think it's 340,088 minus provisional payments, that is 323,888. So there's a tax liability. Right, then the next one, shareholders for dividends. Right, shareholders for dividends, we were told our total dividends for the year. Total dividends for the year amounted to 445,600. And we know that the final dividend is only paid in the next financial year, right? Then where do we get our interim dividend? Right, our interim dividend, get it from the balances, right? They say dividends on ordinary shares 340,000, so minus 340,000. I then short-term loan, right, that is the 392. $400. That's your short-term loan. Let's calculate the rest. That is 203,100 plus 3,400 plus 12,000 plus 37,500. That's 203,100 plus 3,400 plus 12,000 plus 37,500. That's 256,000. Then 340,088 minus 323,888. It's 16,200. Then 445,600 minus 340,000. That's 105,600. Right, then adding current liabilities, it will have 256,000 plus 16,200 plus 105,600 plus 392,400. That's 770,200. Then calculating your total equity and liabilities, that's 770,200 plus the loan 535,700 plus shareholders equity 3,456,000. So that will be 4,761,900. Then that will earn you your 23 marks. Alright, so that was the question. It was just difficult to get information that you need, but once you get it, it's simple and straightforward. Thank you for watching. I'll be uploading more.